beyond property investments, managing your wealth robustly, right? A lot of what Justin shared just now really resonates with me, right? We are here today at the Home Expo to get value, right? Be it buying appliances, getting the best home loan, understanding how to make the most of our first or second property investments. But along the way, right, as what Christine shared, property investment is a big capital outlay, right? Before we get into our first or second property investment, what can we do to better manage our wealth before we get that, 500,000 down payment, right? So I'm going to talk to you a little bit more about other investment options for your cash as well as CPF, right? A little bit about Endowus. We are Singapore's largest digital wealth advisor. We help you manage your cash, CPF, and SRS. And I'm the partnership lead of Endowus, right? I do a lot of sharing about how you can manage your CPF better. And I just want to share again, we are a private firm, right? I'm not from CPF, neither am I from Orange Tea, right? So whatever I'm sharing is, in my view, in your best interest. So let me go to the slides. Very quickly, disclaimer, whatever I'm sharing with you today is not financial advice. So if you have any questions, feel free to reach out to me later on at the booth behind or my colleague Sue. We are in a bright blue Endowus t-shirt. And yeah, let's go into it, right? There is going to be a quick poll just to understand where you guys are in your property or personal wealth investment journey, right? So 2 quick questions on Pigeonhole. Maybe for a start, if you can scan the QR code. Where are you in your property investment journey? Do you own a property? Not own a property? Do you own one residential property, or do you own multiple properties, including, commercial, industrial assets, etc.? Okay, we have around 40 plus people here. Can we have more people joining in? We have 10 participants now. Yes? Oh, sorry. Let me just... Okay, I think we roughly have a good gauge of the crowd here, right? Most of you own one residential property, right? Similar to me, right? I also own one residential property. Okay, maybe let's go on to the next question. What are you most keen to learn about today? Okay, this is surprising to me. How to grow my CPF. Then followed by downsides, risks of property investment, other investment options, and about Endowus. Yeah, so this is basically what I'm going to cover today, right? How to grow your CPF, maybe some thoughts around your downsides of property investment, especially if you were to buy your second property, right? And of course, what are different investment options out there, right? So compared to owning a property, right, there are a lot of investing options out there that you can start off with $100, $1,000, right? So these are some of the options that I'll be sharing with you here today. Okay, so let's get started proper. And yeah, a little bit about Endowus, right? As what the MC was sharing just now, we are the largest independent digital wealth advisory firm in Singapore, right? We have more than $5 billion worth of assets at the group level, right? For a company that only started marketing our services in 2019, right? So really proud to be part of the journey. I've been with Endowus for more than 5 years. All right, there's 2 key products that we offer, right? One is an expert advice portfolio, right? So for those of you who are not familiar with buying funds, you just want to get exposure to what you're comfortable in terms of risk, right? This expert advice portfolio will be the best option for you, right? We have a fully staffed team of more than 10 investment options, 10 investment professionals who will pick the right funds for you and manage and track the fund performance, right? The other option, of course, you can buy your own funds at very low cost. Yeah, so that's about Endowus. Right, so what I'm going to talk to you today about, right? First, why most of us will not be able to, buy a property or invest in a property beyond our residential property, right? So that's the first thing I'm going to talk about, some of the constraints around that, right? I'm going to talk to you about the different investment asset classes as well as investment instruments out there, right? And lastly, I'm going to talk about how you can grow your CPF, right? There's a lot of interesting statistics that I've pulled out from SingStat, from CPF when I come up with this deck of slides. And it will be very surprising compared to what you see in the press, right? So I hope that you can stay on and for me to share these insights with you. Okay, sure. Okay, so first data point from SingStat, right? So how does the Singapore household manage their wealth and where do they put their money at? Right, so the first thing I want to point out the two largest part of the chart, right? The one in dark blue, 44.4%. No surprises, right? That will be property investment, right? Our HDB, our condominiums, even some form of commercial real estate, right, might be in this 44.4%, right? That's the largest part of what we own as Singaporeans, right? And then the next one will be cash, right? Currencies and deposits, right? Currencies and deposits at 19.2%. That will be your fixed deposits, savings accounts, and whatnot, right? Then the third largest one will be CPF, right? Our CPF monies. That will be at 17.8%, right? So exactly how much is in each of these, right? 630 billion and 820 billion is in public and private property asset value in total, right? That's almost $1.5 trillion, right? And then you'll see that what's the growth rate across the years, right? You will assume that residential property or our value of our property will have grown a lot across the years, right? But if you look at the data from SingStat, if you look at the past 10 years, property assets actually grew the slowest out of these three pies, right? The fastest actually is CPF. CPF net of withdrawal for property, right, grew by 9% per annum. Okay, let that sink in, 9% per annum, right? Whereas the next one is not real estate still, right? It's actually currency and deposits. That one is at 6.7%, right? Real estate asset growth is only at 5+%, right? So we actually have a lot of opportunities to think about how we can grow our cash in the bank account, as well as our CPF holdings, right? That is earning 2.5% or 4%, right? So that's something that I hope that you guys have a think about, right? How can I grow my cash better? How can I grow my CPF better, right? Be it, especially if you are thinking of investing in property, right? Before you are able to afford the down payment, what should you be doing in terms of growing that money, right? Are you already overexposed to property investments? That's one question. And then the other thing is, what can you do with your cash and CPF? Okay, so why property investment? I think maybe just take a step back. Many of us are very interested in property investment, right? So why so? I think it's something that's very relatable. When we go for our reservists, when we go for CNY meetings, we all talk about property investment. As what Justin was sharing, home ownership in Singapore is very high, right? It's over almost 90%, or if you look at certain data, at some point of time, it's more than 90%, right? So this is something that is very, very prevalent in Singapore. So the perceived mental barrier, or even in terms of money-wise, right? Property investment is very accessible to Singaporeans, right? Be the HDB, public housing, or private real estate investments, right? So almost all families own their property, and therefore thinking about property investment is so simple and accessible, right? Next thing, it's a very tangible investment asset, right? So when we buy a property, people who are very risk averse are less likely to complain about it, right? Because they can see and feel the property, they know that it's there, it's not going to run away, right? Whereas, sometimes people talk about how buying an ETF or buying a fund doesn't feel so tangible, right? Some people even compare that to buying a cryptocurrency, right? So real estate investment, definitely very tangible, right? And something that we feel comfortable with, right? And of course, the last thing is real estate investments are very leveraged, right? And therefore, you can get a very good return from it if you were to even make a small percentage increase, right? So we talk about how the minimum down payment that you have to put in, right? The LTV has been decreased to 75%, even for public housing, right? So previously it was as high as 90%, right? They gradually lower it to 75% now, right? But 75% means that for that $1 that you put in, you actually have a $4 exposure to the real estate. Right. Simple example, if your real estate value increased by 10%, right, your cash growth, right, when that real estate value increased by 10% is actually 40%. Right. That makes real estate investment very, very attractive relative to, let's say, buying a stock with a similar 10% increase. Right? So that's really some of the key reasons why people buy real estate. Right. But the thing is, it's not so easy for us to grow our real estate investments, especially when it comes to our second property investment. Right? So how does that, why is the odds stacked against us when we buy our second real estate investment, right? So first thing is ABSD, right? The government is really trying very hard to ensure that people who buy their second real estate are willing to go and pay for it. Right? The ABSD is a very common tool that they use to manage the real estate and to cool the property sector if prices are too high, right? So ABSD is as high as 20%, even for Singaporeans, right? For PRs, it's 30%. For foreigners, the percentage is a crazy, crazy number, right? So ABSD, very clear reason how it works against us, right? Second thing, CPF OA restrictions, right? Some of us here, looking at the crowd, you may have a very big CPF balance. Right, and you feel like, hey, maybe I can take some of that CPF balance to go and buy property, right? But it's not that simple, right? For the first property that we buy, there's no restrictions on how much CPF we can use, right? There might be some restrictions in terms of a housing down payment, right? But when it comes to your second property investment, there is a CPF restriction, right? You need to minimally set aside the basic retirement sum. And if your lease term of your first and second property doesn't meet the requirement, you actually need to put in the full retirement sum, right? So that is also a real practical reason why it's difficult for you to invest in your second property, right? And then of course the last thing, higher down payment, right? Similar to the issue with CPF, right? So once you have your second property investment, you need to have a 25% cash down payment. Previously, you can fulfill this criteria using some CPF, but this has to be pure cash, right? So it's going to be a lot more cash outlay for you, right? So two reasons why second property investment doesn't work for you. Number one, you need more capital, right? Cannot use CPF, need more capital. And then the last thing is, if you were to build a financial model or try to calculate the ROI of it, the numbers don't work as well because of ABSD. Okay? Yeah, bottom line is hard to go and invest in property profitably, especially it's your second property, right? So how you can go about it, right? Get your wife to invest instead, right? Make sure that you all don't jointly own the property. That's one way. And of course, the other way is to be very sure about your first property and invest it well. Okay, so let's look beyond property investment and share a little bit more about the kind of investment options available out there, right? So the development of technology and the finance sector actually opens up a lot of new investment options out there, right? The innovation that we have seen in the past 10 years have been really mind-blowing, right? I've started investing as a student more than 10 years ago, right? And the options that I have nowadays is something that is really, really what I would have wished was available back then when I was a student, right? So these are options definitely you can consider, right? And before that, maybe let me share a little bit more about how to navigate the jargons in the investing industry, right? Sometimes it's very, very difficult for us to understand it, right? Because there are so many terms out there, they are used interchangeably. We don't know how to understand it and use it in the right context, right? So when you think about investing terms, there's two ways we can look at it, right? One way is the asset class, right? Asset class effectively will mean the different type of groups of instruments or the groups of underlying things that you're investing in, right? Are you investing in a underlying residual ownership of a company, right? That is, you're investing in a stock if that's what you're doing, right? Are you buying in real estate, like a piece of land or the core and shell of a commercial building, right? That's real estate. Bonds, you are lending your money to someone else, and then there's an obligation for them to return you the money with some interest, right? Even before they pay back their shareholders, right? So that is bonds. And then, of course, cryptocurrency, which is a totally different ballgame by itself, right? So that's asset classes. Between asset classes, They have all their traits and characteristics in terms of risk and return, right? But that does not influence how you can get access to this asset class exposure, right? Which is what I want to get to next. The investment instruments that you can invest in, right? How do you get access to these asset classes? Is it through a listed security, right? Something that's listed on SGX or listed on the New York Stock Exchange, right? So those listed securities will be how you can is one format that you can get exposure to an asset class, right? Sometimes it's a little bit more complicated. You can get it in the form of a fund as well, right? A fund is just a pool of securities or underlying investments, right? And these funds can exist in two formats. One of it is exchange-traded funds, right? One of it is mutual funds or unit trusts, right? So these are basket of underlying securities that is diversified, right? And you can invest in them in a very convenient manner, right? So a lot of the growth in the finance sector is actually centered around mutual funds and ETFs as well, right? Because it makes investing so diversified, so low cost, so convenient. Right, and then of course, last thing, not derivatives, right? Options, calls, puts, things like that, right? Where you don't effectively own the underlying asset, right? But someone else is taking another position of it, and then you are getting indirect exposure to the asset class. Okay, so that is on asset class and investment instruments, right? So what are some examples of all these different asset classes, and how does that relate to me on a day-to-day basis, right? You can see that these are the main 5 asset classes, right? You have cash, which effectively is something that is very, very low risk. You can use it, you have very high liquidity for it, right? But of course, you are more like a price taker rather than a price maker, right? The interest rates of the bank is pretty much fixed. There's no way you can bargain about it, right? There's also fixed income as well, right? So fixed income, slightly more risk. There's interest rate risk. There might be even credit risk from the firm or the country that issue the fixed income instrument, right? And that would, there's a wide range of risks out there, right? But the instruments that you might be more familiar with are things like T-bills, Singapore government securities, SSVs. Okay, and then next thing, equities, right? Something that we are all probably very familiar with, especially if you look the local stock exchange, Singtel, CapitaLand, DBS, and so on, right? But of course, there are also overseas companies, right, where there might be more growth. For example, Nvidia, right, Palantir, and so on, right? And of course, you can also get exposure to equities through, again, ETFs and unit trusts, right? There are also other things like, alternative investments, wine, collectibles, private credit funds, private equity funds. The returns will vary. And lastly, what you guys are probably most familiar with, right? Direct investment into real estate, right? But of course, again, if you don't have the money to go and put a down payment into a second property, you can also buy REITs as well, right? And for many retirees, REITs are a very attractive investment instruments because you get quarterly payouts from dividends. Okay, so these are all the examples of the different asset classes. And I want to go into a little bit details about how to think about all these different investment instruments and how that would affect you when it comes to actually investing in it, right? And what you should be looking out for when you choose from all the myriad of choices within these investment instruments, right? So I think one easy way to think about it is liquidity, right? Can I take the money, when I invest in it, can I immediately take out and use it for other purposes, right? When we think about property investment, right, in the context of buying a detached house or a condominium, the liquidity of it is very low, right? But the instruments that I'm sharing here actually has a lot more liquidity, right? You buy today, maybe you'll be able to sell it within a week or so, right? But there are some nuances behind it, okay? So if you buy listed stocks and bonds or even ETFs, generally there is very high liquidity for it, right? Even intraday liquidity, right? So you can buy and sell within the day itself, and you will be able to either lock in a profit or loss within the day, right? And that's very, very different from real estate investments, right? For unit trusts, generally it's the same, right? You have daily liquidity, right? But it depends on how you get an instrument, right? So if you were to buy it through traditional platforms like a bank, a relationship manager or a financial advisor, some of it might have lockdowns, lock-in periods, right? So it may affect the liquidity of your investment, right? Mutual funds or unit trusts have a very, very bad rep because they are often sold and repackaged as investment-linked policies, right? ILPs, right? So that would also be a reason why you may not want to buy unit trusts, especially in that context, right, where there is lock-ins and additional costs with it, right? The other thing is about the cost of investing, right? That for again, listed stocks, bonds, and by that classification, ETFs, there is going to be fees around, brokerage fee, exchange-related fees, and this is something that you need to take into account of when you buy it, right? And for smaller investment denominations, these will be very important, right? You may trade $10 or $100, but if your transaction fee is a flat $5 or $10, then the percentage cost of the investment will be very high, right? So that's something to take note of when you buy exchange-listed or traded products. Okay, for funds, it's a bit more different, right? There's fund fees, there's platform fees. There might be also sales charges and switch fees. And the complicated thing is that, a lot of platforms may charge it and other platforms may not charge it, right? So it's very difficult to do a like-for-like comparison, and sometimes you have to go into the details and to ask, each provider what are they actually charging or what are they not, right? So something to take note of, right? It's never as simple as it looks. And then, of course, the last thing is, what are the other considerations? If you buy single securities, then of course, you bear the risk of one single company, right? Lack of diversification. You also have to take into account all the dividend reinvestment plans that might be going on, and all the other different corporate actions where there are things like rights issue and so on and so forth, right? So it can be very taxing on you, right? For funds and ETFs, then it's a lot simpler. But again, there are other considerations as well. Okay, is there an investment instrument? I guess that's really what you guys are hoping that I would address, right? Is there a specific investment instrument that is superior to the other? Not necessarily so, right? But there is a perception that mutual funds or unit trusts are worse because of, again, how ILPs are being sold and being positioned, right, by financial advisors, right? So be very aware of the nuances of each, and then from there on, you can choose the right instrument for yourself. Okay? So I'm just going to move on to how digital players actually make investing a lot simpler, right? So for traditional players, I'm talking about again, bank RMs, financial advisors. It's very relationship based, right? And there's a lot of one-on-one sales and one-on-one interaction with you as a client, right? For many of us, we choose to be more hands-on with how we manage our money, right? And we may prefer to use a digital brokerage or a digital wealth advisor like Endowus, right? Where it's very self-driven. You can use the platform as and when you like. You can check your investment as and when you like, right? So that's something that you can consider, right? Of course, using a traditional platform, you won't get into any worry about whether you get how the user experience is like, right? There's a lot of familiarity with these brands, right? But of course, when you use an online broker or using a wealth advisor, then a lot of it relies on your how self-driven you are and how you want to go and explore the different options, right? Generally, the traditional players, right, being a one-on-one, because they have to maintain a one-on-one interaction with you, the cost of their services are actually higher, right? You may not directly feel the cost of their services, right? But it might be inbuilt within the products that they sell, right? In terms of the high fees that the underlying funds may have, in terms of the lower coverage for the same price of premiums that you're paying, right? Whereas for the digital players, it's going to be a lot cheaper. Yeah. So bottom line of investing, right? Going back again, looking at where your household assets are, right? Many Singaporeans are still holding on to cash, fixed deposits, or even their CPF, right? They're not doing much with it. As I was sharing just now, most of our real estate assets have been growing at a much slower rate compared to what's sitting in our bank account and what's sitting in our CPF. Right? We need to think more about how we can utilize that source of our wealth better. Right? Next thing, investing in property is really not realistically accessible to most households. Right? Even if you want to think of buying our second property, before we build up that 200k, 300k, 500k, we can make that cash work harder, right? And some of these might be better off looking at other investing options with a smaller investment denomination, right? And then lastly, investing in global stocks and bonds and even other asset classes are actually a lot more accessible to us than 10 years ago or 20 years ago, right? So that's the key takeaway that I hope you guys get from this session. And then the last thing, right, what you are most interested in, right, using CPF beyond property investment. Right, so I'm going to address a few things first, right? What can you use your CPF for? I don't think many of us here are very aware of how we can use our CPF beyond property investment, right? So I'm going to do a quick summary of what you can do with your CPF, right? CPF ordinary account, right? You can use it for obviously property investments, right? But you can also use it to invest in things like T-bills, invest in listed stocks, ETFs, or even mutual funds, right? You can do a lot more with it, right? And then the other thing that might be very pertinent for families that are a bit more cash-strapped is that you can grow your CPF OA monies to pay for your siblings or your children's university education. Right, it's not just there for retirement, right? You can use it more immediately for your family members' polytechnic tuition fee or even university tuition fee, right? So there is a purpose to meaningfully manage and grow your CPF, right? That's what I want to share with you, right? And of course, MediSave, anything that has to do with medical bills, right? Be it insurance premiums, be it outpatient or inpatient treatment, right? There's a lot of data from CPF. You can go and check it out. And lastly, retirement, the special account or the retirement account, right? It's mainly for retirement purposes. I don't think that the name special account really does it justice. It's actually very boring, right? You can't do much with it. The investment options are fewer. So we're going to spend more time talking about how you can grow your ordinary account, right? Because special account risk-free 4% is actually not too bad already, right? So think about how you can do better with that 2.5%. Right, so there is a lot of data out there saying that, too many Singaporeans' money are placed inside too many Singaporeans' CPF money is actually used to fund property investment. Right, you all seen that on social media or seen that in the news, right? And there are calls to go and, reduce the usage of CPF for property investment, but that actually is not true, right? If you look at the past, the CPF OA balances, which is already net of withdrawal for property, right? In 2006, it's 57.5 billion, right? And for property for public property, it's 78.8 billion, and then for private property, it's 45.2, right? Interesting figure, right? For public property, it's higher than the OA balances, right? But if you look at the figures now, more recently, end of 2023, right, the figure is 179 billion is actually lower than 180 billion, right? So are we using more CPF OA money in property? No, right? It's actually decreased percentage-wise, right? More money is sitting in CPF OA, earning that 2.5%, not working hard, right? Whereas for real estate, having those amount withdrawn for real estate is grown at 5% and 4.3%. Right? This is very different from what I would have assumed and what is often mentioned in the press. Right? We are using too much CPF for property. Something to take note of. Right? So how can we as a nation do more with our CPF OA money? Right? And I'm sure for many of you who have invested your CPF before, you might have, more likely than not, you have a bad experience investing your CPF. Right? I see some notes here and there. Right? It has a very blemished track record, to put it nicely, right? CPF investment scheme. It has a blemished track record, mainly because CPF investing fees are a lot more expensive, right? Your financial advisor can charge you 3%, right, for selling you a fund, right? And the platform fee could be as high as 1%, right? And the funds that they are selling you can be the recurring fee could be as high as 1.75%, right? So even before you earn money, they are already charging you 5.75%, right? So how is it possible for you to get a good return from a CPF investment, right? So that was a problem that plagued the CPF investment space in the past, right? Costs were very high, right? And very often returns are also compared in a very short-term basis, right? They look at 3-year time frame, 5-year time frame, and CPF investing is the returns are going to move up and down like what the markets will do, right? But there are a lot of changes in this, and we are very proud to, provide our services when there are meaningful changes in CPFIS, right? So this is in 2019 March, right? So the fees have already been lowered so that there's 0% sales charge for unit trust, and also platform fees are reduced to 0.4%. Right? That in itself will mean that CPF investing is low because of the government restrictions, will be lower costs, right? And that consequently, there should be better outcomes. Okay? I guess the next thing is, Sheng Shi, I am very conservative. I don't want to go and buy risky funds. I just want to get a risk-free returns for my CPF, right? Can I just go and buy something like a T-bill or even buy fixed deposit using my CPF money, right? I hope that you guys, like how I helped my parents, managed to get the CPF investment, CPF T-bills investment when the T-bills rates are at 4%, right? And managed to get out of it, get a good return out of it. Any of y'all have done that? 4%, yeah, I have someone raising your hand. Anyone else? No. Are the rest of y'all still sitting on the fence on CPF T-bill investing for CPF OA? Okay, I see someone nodding. Okay, you might have already missed the train, unfortunately, right? Because as what Christine was sharing just now, the global interest rates are going to drop, right? And consequently, Singapore being a very open economy, very open market, we also lower our interest rates, right? And you can see that the T-bill rates have been tumbling down since the start of the year, right? That's a reality that we have to face, right? If you are a very conservative, risk-free investor, I want to share again, you are a price taker. You are not someone that can dictate and, say that I want a 4% return, right? That just doesn't happen, right? And the most recent T-bill rate that we see here is at 3.13% per annum, right? So if you were to take into account the withdrawal time, right, and how CPF charges your interest rate, you may not be able to make back that lost interest if you were to invest at a 3% or even a 2.9%, right? I'm sure some of you who have invested your T-bill will know that there's a threshold that's above 2.5% that you need to hit before you invest in, because there's a withdrawal time limit, right? So do think about investing in slightly riskier options, especially if you don't need the money in the short term. Okay? There's a range of solutions, kind of investment options out there for CPF. Right? You can find this on the CPF website as well. Right? It's a lot more limited because of how the government want to make sure that our retirement monies are not gambled away. Right? So the CPF investment solutions out there are already screened and monitored by the government, government-appointed third-party firm. Okay, so for unit trusts, they go through a rigorous process of screening those funds. Same for ETF as well. Not all the ETFs that you see on SGX will be available on CPF investing, right? And yeah, if you were to buy single stocks, no matter how safe the company is, right, you can only invest up to 35% of the investable savings for CPF OA monies, right? So there are very clear restrictions. So what I want to share is that actually investing in unit trusts, right, you can get more global exposure, and it's also more diversified as well, right, for you. And there's a range of investment asset classes that are available, right? Very low risk, short duration bond funds, all the way to US S&P 500. Right, so maybe just to share about the cost of investing in CPF, especially for unit trusts. Right, so as I was sharing just now, in the past, if you take into account sales charges, platform fees, fund fees, it used to be as high as 5.75%. More recently, when they reduced some of the fees, it became still go as high as 2.545%. Right? It's still relatively high, right? And when it comes to investing for the long term, when you are not trying to speculate, then all the more you should penny pinch and manage your investment costs. Right? That's the strategy. If you are just buying the broad market, you should be penny pinching and reduce your costs. Right? So you will see that investing in brokerage, right, when you take into account the platform fee of 0.4%, the fund fee of 1.75%, it could still be as high as 2.15%. Right? But if you were to invest through a platform like Endowus, right, where our platform fee is 0.4% and we have access to low-cost index funds, right? Funds that are similar to the S&P 500, similar to the MSCI World Index Fund, right? So those funds are very low cost, and because of the cost difference, it's easier for you to get long-term outperformance, right? It may differ in the short term, but over a long period of time, a 1+% difference in cost compounded will make a very big difference, right? There are some details about how we are different from the CPF providers, fund providers out there. I won't go into detail of it, right? But essentially, what this means is that we take care of most of all the hard work, right? Make sure that it's diversified, tailored to your risk profile, right? It's low cost, and then of course, lastly, we don't try to speculate on the market, right? Strategic asset allocation. So it's basically telling you that you can buy and hold, and just at the age of 55 or 65, you will be able to get a good return out of it. Yes, some quick sharing about misconceptions on CPF investing, right? I find quite a few advertisements or articles saying that you should be buying a high-yielding stock, right? Be it a REIT or a blue chip bank on the SGX, so that you can do better than the 2.5%, right? It's actually not such a great idea, right? Because that money that you get from investing in a stock, you don't enjoy the dividends from it, right? You'll still go back into your CPF, and then when it goes back to your CPF, it doesn't grow and compound, right? So if you want your wealth to compound, you should just invest in a fund that accumulates so that it will carry on compounding, right? So that's one common misconception of CPF investing, right? Then the other misconception is that you have to pay back if you lose money, be it the short term or the long term when you invest your CPF money. There's no concept of accrued interest, or there's no concept of paying back any losses if you invest your CPF money, right? This is very different from property investments. And then the last one, right? CPF money should never be invested. Risk-free rates will always be good enough, right? Some of my friends have this idea, right? We have graduated for 10 years. The past 7 or 8 years actually have been very, very low inflation rates, right? The Sing dollar used to be, and still is, very strong, right? So we don't experience high inflation in Singapore, right? But the past 2 years have been an exception, right? And we realize that things are getting a lot more expensive, right? And that's why we need to think about how we can grow that 2.5% more, so that we have more for our retirement, right? So hope you guys take away these 3 misconceptions about CPF, and hopefully you can have a more conversation about how you can grow your CPF. Yeah, very quickly, about Endowus, right? We are not a brokerage firm. We want to help our clients invest better so that they can live easier today and better tomorrow, right? So we don't want to excite you with all the market news, right? We just want you to buy and hold and forget, right? So that you let your wealth grow organically and not be too flustered by any market news, right? And very quickly about our platform, right? It's meant to be really simple and digital, right? And as I was sharing just now, this helps us manage our costs as a digital platform so that you can enjoy that cost savings, right? What we are able to do at scale, right, we'll be able to pass back to you in the form of lower costs and ultimately better returns, right? Similar to how you are using platforms like Klook rather than travel tour guides, right? We are also passing on some of the cost savings back to you, right? And there's a lot of great financial literacy materials on our platform so that you can learn how to manage and grow your money better, right? And some reasons why our clients use us, the range of products that are available on the platform, right? If you want to invest for income, you can do that as well. If you want something that's very low risk that gives you, some cash fixed deposit like returns, we have the cash management solution as well, right? So there's a range of solutions on our platform. And finally, right, if you want to try out our services, please scan this QR code, and there will be an $80 off Endowus fee, right? And this will be for any of our offerings out there. Yeah, so do scan that code. There's no obligation for you to fund that account, right? Try to play around with that platform, and then hopefully we'll be able to get you as a client. Yes, I guess I don't have to answer in Singlish, but as I was sharing just now, right, we are trying our best to go and make sure that CPF investing, you guys have the best odds when it comes to CPF investing, right? It's long-term retirement money, right? And when it comes to long-term retirement money, we don't want to speculate with it, right? So when it comes to investing in a way that's non-speculative, we want to make sure that it's aligned to your risk tolerance, it's diversified, it's low cost, right? So we offer a lot of low-cost index funds on our portfolio that will increase your chance of getting a good return from your CPF investments, right? Some of these funds are exclusive to Endowus, right? And it will not be available on other platforms, right? So do check out there's a lot of content on our YouTube channel, articles that has been written by my founders, even written by myself. And when you read some of those, you realize that, hey, maybe Endowus do have the best options out there.
So in other words, you are saying that you'll be getting sound advice from you guys, right?
Low cost, diversified funds.
Sure, all right. Okay, do we have another question right now? Yes, we have another question. Well, this one got two questions, come on. Okay, we're just going to address these two questions very quickly. The first one, property investment or REITs, how to think about it? Very simple, just sit down and think. Okay, all right, we're going to ask the first question.
Yeah, sure. I can take the property or REITs question, right? It's actually pretty simple. It's two very, very different investment, right? When you think about I suppose when you talk about property investment, you're thinking about buying a HDB or condo or maybe even a commercial property, right? When you were to do that, you will need a very, very big capital outlay, right? $200,000, $500,000. It's a very, very huge investment, and then of course you will also have to, get the support of your wife, your family, and whatnot, right? But when it comes to buying a REIT, it's going to be a much smaller capital outlay, right? It could be $5,000, $10,000. You could even get it through an ETF or a fund as well, right? And that may also further reduce how much you need to put into it, right? So from a diversification standpoint, from a capital outlay standpoint, it's two very different type of investment, right? So do consider that from that perspective.
Okay, so you're referring to REIT like you can buy a piece of a shopping center.
Yeah, like a CapitaLand,
So I can go and buy the tile all. Okay, good. Okay, now Leisure, thank you so much, sir, for your time.